continuation patterns. When we say chart continuation patterns, we are talking about patterns that you're going to see and you know that the market is going to continue in same direction. What am I trying to say? Yeah, I'm recording now. Patterns that you see and you know that the market is going to continue on the same direction. And on my screen here, we have some patterns like the falling wedge. You can see it. Let me get my writing tool. The falling wedge. This is called the what? The falling wedge. Now, you see this is an uptrend. Like when the market gives you a high and the market retraces, okay, it gives you this pattern of a what? A falling wedge. Okay, it gives you this pattern. The market will be retracing, dancing around here, gives you this pattern. So it gives you another what? Higher high. You know, retraces a bit, gives you another falling wedge, goes up like that. So when you see this falling wedge, okay, when you identify it in an uptrend, it's what? It's a sign, it's an indication that the market is going to what? Keep going up. But you don't have to what? Assume. You have to wait for what? You have to wait for the wedge to be what? Broken. You can see where it broke. You can see where your entry is. You can see where your target is. So this is a pattern that can be found in an uptrend. So the falling wedge pattern is a chart pattern that can be found in an uptrend. It's an indication that the uptrend will still what? Continue. So when you see the market do this, gives a higher high, gives this, so you just rule your line, which is this line here. You wait for what? A breakout of the wedge. You take another trade to get another what? Higher high before the market retraces. So mostly where this falling wedge is assumed to be areas of higher low. Let's assume this is a higher high. Okay, the market gave you a higher high. Now when it retraces, what is supposed to be here? When it retraces, what does it give you? Let me see it on the chart box. When the market retraces, what does it give you? Are we together? In an uptrend, beautiful, Kingsley. The market gives you a higher low. See, you see the pattern. It gives you what? A higher low. Then it moves up to give you another what? Another higher high. You understand? The market moves up to give you another higher high. You understand? So that is how the market moves. Higher low. Excuse me. Higher lows. Gives you what? Higher highs and what? Higher lows. Do you understand what the falling wedge is right now from my explanation? I'm going to go to the charts to look for some of this to show you practically. But do you understand the falling wedge? I said the falling wedge is like this. The market gives you what? A higher high. Now, when it retraces and in this pattern, Are you getting me? To give you a what? A higher low. So it's an indication that you're waiting for a breakout of this wedge pattern to enter a trade, you know, for the market to give you another what? Another higher high. So it retraces again. It can give you another falling wedge pattern, moves up again to give you another what? Higher high, and retraces for a higher low. So if you see, this is how the market moves in an uptrend. So the falling wedge pattern is what? A continuation pattern in an uptrend. It shows that the market is still going to keep what? Going up. So with this little explanation, do you understand what a falling wedge is? Okay. Do you understand what a falling wedge is right now? Can you hear me now? I said, do you understand what a falling wedge is? Do you understand what a falling wedge is? Okay, I'm going to repeat again for the benefit of those who could not hear me. Okay, I said a falling wedge is a pattern, it's a continuation pattern in an uptrend. Okay, it's a continuation pattern in an uptrend. If you're writing with your note, please take note of that. It's a continuation pattern in an uptrend. It shows that the market is still going to what? Keep going up. Okay, so as I was saying that the market gives you what? A high. Let me use another color to show you. The market gives you what? You see this red point? It gives you a higher high here. Then it retraces, okay, to form this pattern. And you wait for the breakout for the market to give you another what? Higher high. It retraces again, gives you a falling wedge pattern to give you another what? Higher high. So the falling wedge pattern is a continuation pattern in an uptrend. You understand? It's a continuation pattern in an uptrend. So do we now understand what the falling wedge is? Talking about continuation patterns, the falling wedge, do you now understand what it is? Only Miriam understood it. Okay. Peter also did. Okay, Kinsley did. Okay, so I really want to help you understand it, because when you start, don't be afraid of hearing big names. Falling wedge, it's not really, it's just a Forex name. Okay, you can name it whatever you want, but just know that this is a pattern that shows you that the market is still going to continue going in an upward direction. And the opposite of a falling wedge is what? A rising wedge. Now, a rising wedge, which is this, is a continuation pattern in a downtrend. A rising wedge is a continuation pattern in a downtrend. It shows you that the Forex market is still going to what? Keep going down. The market comes here to give you a what? Lower low. And it retraces in this pattern. Sorry about that. The market retraces in this wedge pattern to give you what? A higher low. Please mute your microphone, please. Thank you. The market retraces in this pattern to give us a what? A what? Sorry, I made a mistake. The market gives us what? A what? A lower low. Retraces to give us a what? What is it there? Let me see if you understand it. In a downtrend. Let me get your messages. The market in a downtrend, how does it move? Lower low and what? Awesome. Lower high. It gives us a lower low and it retraces to give us a what? A lower high. Retraces to give us another what? Lower low. Retraces to give us a what? A lower high. So you see, this falling wedge, this rising wedge is the opposite of the falling wedge. You can see it when you look at them. When you look at them, you see it's just the same. This is the rising wedge. This is how it looks like, and this is how the falling wedge looks like. The rising wedge looks like. So the falling wedge is a continuation pattern in an uptrend. This is for uptrend, while this is for what? Downtrending market. Okay, so you see that these patterns help you to understand that the market is going to what? Go in the direction that is already trending towards. Now, you can make your 50 pip with this. You can comfortably make your 100 pips with this, okay? Trading these patterns, okay? I'm going to show you from a live chart so you can see what I'm talking about. But so far, do you understand? Do you understand the falling wedge and the rising wedge? Do you understand? Okay, beautiful. So now we're going to talk about the bullish what? Rectangle. We're going to talk about the bullish rectangle and the bearish rectangle. These are also what? Continuation patterns, either in an uptrend or a downtrend. These are what? Continuation patterns. Okay. Now the bullish rectangle, just like the way it is, you see, this is you see the market forming a rectangle in an uptrend. So the bullish rectangle is an uptrend, is a continuation pattern in an uptrend. So if you're taking note, put it that way. The bullish rectangle is a continuation pattern in an uptrend. What am I trying to say? You know how a rectangle is. This is a rectangle. They are of what? Not really equal shapes. It's not a square, okay? But they are not really of equal shape, but this is how a rectangle is. Some people do call it bullish flag. When you hear bullish flag, you see this looks like a flag. This is a stick, a what? This is a stick and this is a flag. Okay, so the bullish rectangle, most people call it bullish flag. So when you see this flag, what are you expecting? You're expecting another stick and what? Another flag. What are you expecting? You're expecting another stick and another what? Another flag. So it's a bullish what? Continuation pattern. It's a bullish continuation pattern. That is why it's called the bullish what? Rectangle. But most traders call it flag and stick. Okay, you see how it looks like? It gives you another flag. So it keeps going until you see one of the reversal pattern that I've showed you. Maybe on top you get a double top, or you get a head and shoulder. Now you know that the market is about to what? Reverse. The forex market is about to what? Reverse. So it means that you can take your profit. Okay. Likewise, the bearish rectangle. the bearish rectangle is, as the name goes, okay, it's a down, it shows in the downtrend that the market is still going to continue what? Going down. It is just the opposite of the bullish what? Rectangle. So it's a continuation pattern of a downtrending market. So what do you do when you're doing your analysis and you identify the market giving you a what? A stick and a what? A flag. So you wait. You wait for what? A breakout. You must wait for the market to break out from the rectangle before you sell. So you take the pole, you are selling the pole to get another what? Flag. So these are all systems. You can see the market gave you this, a lower low, and starts giving you a what? A what? Bearish rectangle. So all you need to do is to wait for a breakout. Okay, and you take your sell for the market to give you another what? Lower low. And if you draw your trend line, you see that's how the market will keep giving you, with these patterns and all that. So you see, that's just simple ways that the market moves. And if you can understand these patterns, you can start eating. You can start making good money. Okay. Now you can see the next pattern I'll be talking about is the what? The bullish pennant and the bearish pennant. They are almost the same, like the rising wedge and the falling wedge. But who can spot the difference between these two? Who can spot the difference between this and this? Okay, who can spot the difference? Let me see it on the chat box. Who can spot the difference? They're almost alike. Okay. Okay, I don't really see, but if you can see the rising wedge. Okay, let me see your reactions. I have one or two messages. The peanut is in form of a triangle. Yes, 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 yes. Yes, yes, yes. That's awesome. It's in form of a triangle. Now you see when you look at the rising wedge, look at the tips. When you look at this end is a little bit open. But you see the peanut has a closed end. Okay, so they are almost the same, they are alike. Okay, but the bullish pennant is a what? An uptrending market continuation pattern. It's a continuation pattern in an uptrend, while the bearish pennant is a what? A continuation pattern in the downtrend. Okay, so when you see the bullish pennant forming, this is a higher high. Okay, the market keeps going in this direction. You wait for a breakout, you buy, you make your 20 pips, 50 pips, 100 pips, just trading this chart patterns. You can see this, the market, the bearish pennant. You can see the market retraces, it breaks out, just simple trade ideas you can be using to what? Trade the market. Okay, so you see that these things are all there for you. Okay, they are all in the market. Okay, so we'll be going to do some little practicals later. You can see some bilateral patterns that we have here, which is called triangles. Okay, you can see we have the ascending triangle, we have the descending triangle, and we have the what? Symmetric triangle. Now, these are patterns that show you that the market can either it can buy or what? Sell. Okay, so they are bilateral in nature. Okay, so what that means is when you see an ascending triangle in this format, okay, you see how the plotting is. You wait for a breakout, whatever direction that the market breaks, that is the direction you are selling. Okay, they are all triangles. You can see them, different shapes of triangles. You can see them. Okay, it's just the names that might be a little bit confusing, but they are just triangles. In whatever direction you see these triangles forming, you need to know that they are bilateral. They can either go anyways. Okay, so when you see them, this is your analysis. This is your entry. This is your entry. So whichever direction that it breaks, that is the direction that you will be trading. If it breaks up, you are trading up. If it breaks down, you're trading to the downside. Okay. Do I have any question on the chat box? Let me see. Bullish is uptrend, while order is downtrend. Okay, awesome. That's a reaction to what I asked. So you see that these patterns, these chart patterns, is what you will be seeing every day as you trade the financial market. So a lot has been said. So let me go and look for some of these patterns to show to you. Okay. So hold on. Let me share my screen. Share. Okay, I'm trying to open up the market, so I'll show you some of these trades. Okay, the other day I was showing you, I told you about the trade I took, moving an account from $100 that it is to about 300. So let me show you that. I think I have that trade here, GBP NZD. Okay, so practically, why did I take this trade? Let me show you. All I did was an analysis. Okay, I saw the point that the market was what? Trending up. You can see the market was going in an uptrend. Okay, the market was going in an uptrend. See, giving us higher highs and what? Higher lows. But something spectacular happened. The market gave us a high, which is what? I see this as a head, and it what? It gave me, you saw this last point where it stopped, and it came again to give me another shoulder. Ladies and gentlemen, why won't I make money? Okay, why won't I make money when I'm seeing this? So what did I do? I just immediately, the market showed me this pin. Immediately I saw these candlestick patterns. I know there has been a rejection here. So it's giving me another shoulder. And you can see, let me count how many pips. This could have been you. So you need to see all these patterns. It's a reversal what? Pattern. You can see I took profit here. That's about 300 and something pips on this trade. So what am I expecting from this market? I'm expecting that a downtrend will start. The market will start trending down from here. This is what I'm expecting now. So let me show you guys what I'm expecting now. I'm expecting a downtrend from here. You see, I'm expecting that this market will start going on a downtrend because it has showed me what? A reversal what? Pattern. So it traces and gives me a lower high, and it moves to give me what? A lower low. Okay, so you see that this is just how trading is being done. This is how trading is being done. It's not magic. It's just following the patterns, and knowing what to do when you identify them. So from what I've showed you, is it simple? Is it interesting? See, you see, beautiful head and shoulder. And I took my trade and I made money. Okay, so let's see other patterns that we've been talking about. You can see this pattern here when the market was trending up. Who can tell me this pattern? What is this pattern here?
What bullish wedge, a rising wedge or falling wedge also. Falling wedge.
The what? A falling wedge. You can see it's a what? It's a falling wedge. So once you identify this pattern, what do you wait for? You wait for a breakout. You can see when the market broke out of the wedge. You can see how the market broke out. If I'm to see this, this would be my perfect entry point. Immediately the market broke out of the wedge. You see, this would be my what? My perfect entry point. I'm going to enter this trade here, and my target is going to be what? Here, this point here. This is what my target is going to be. This is where my take profit will be. Before, I'm going to put my take profit a little bit before the previous what? High. And you can see the market would have just gone and hit your take profit. Did it hit your stop loss? No. So when you are patient enough to wait for these patterns, you keep trading and you keep what? Meeting good success. This is another sample of a falling wedge again. You see, it keeps giving us these patterns. You see, boom. You see, higher high. This is a higher high. This is a what? This is a what? A higher low. This is a what? Higher high. This is a what? Higher low. And what has the market given us here? See, it has moved. It has given us a what? A higher high. And it gave us another pattern there. So you see how this market moves. Guys, this is just simple that you can print these pictures and just wait for these signs to show up. You can see how the market moved here, gave us another what? Falling wedge. This time around, it's a small falling wedge. But that's it, guys. That's it. Okay. You can see the breakout of the wedge. Right now, the market has what? Giving us another what? Another high. Okay, so right here, I'm going to assume that, okay, let me zoom in. I'm going to assume that this market is actually, from my analysis, it's still going to go up a bit. Okay, then gives us either a reversal pattern or it gives us another what? Gives us another wedge. So this can be your focus. This can be your focus. You can put this as your focus, thereby saying that whenever this market breaks out of this wedge, okay, whenever it breaks out of this wedge, because it might just keep retracing. It might just keep what? Retracing here. And when it breaks out, you are expecting what? The market to go up again. So basically, in a simple term, this is just how you find your trade setups. As a trader, this is what you look for. This is how you find your trade setups. So let me look for more currency pairs that I can show you these patterns that we've learned today. Okay, let me check the euro dollar. Put in my so you see that this market moves in patterns like I've showed you for an uptrending market. Let me look for that in a downtrending market. You can see I'm already seeing some wedge pattern, some little wedge pattern. Do I have questions? Okay. I'm already saying, when it breaks, do you buy or sell immediately, or you wait for a retest? If it's an uptrend, you can see from the picture, you can see where your stop loss is. Your stop loss is usually below the wedge. So it's either you wait for a retest or you take the trade, whichever best suits your what? trading strategy. Just go for it. Okay, so sometimes you wait for your retest, sometimes you just take the trade. Now, from what I'm seeing here are samples of what? Falling wedge. You can see how the market is trending down, right? You can see how the market is what? Trending down. So the market gives, I just showed you falling wedge. This can now be what? Termed as a rising wedge. You can see how the market gives you this what? Wedge patterns. You can see these wedge patterns, this rising wedge, and it broke out again, okay, to give you a lower low, and it moves to give you a what? A rising wedge. Remember, I showed you a falling wedge, but this is now what? A rising wedge, okay, and the market what? Goes down again to give you what? A lower low, and gives you what? A rising wedge. Forget about these candles that they are just traps. Okay, they are candles to deceive traders that the market is going up, but usually this is a downtrend. So you see, the market gives us another what? Lower low. Let me just use this point as the next lower low. Gives us another what? Rising wedge. These are all the wedge patterns. So by the time you start trading, your eyes will be identifying all these goodies. You are going to be seeing all these setups. Okay, you can see how the market gave us now. This time around, I'm seeing a pattern here. It did not break this low. You see the lower low that was here. That low was not what? Taken out. So the market came back. You see, other lows were taken out. See the first low. This is the first low, lower low. It was broken. Okay, this is another low. You see, they are lower. You can see, but this low was not taken out. See, these are all lower lows, lower lows, lower low, and lower low. But this low was not what? Taken out. So this is a sign. This is to tell me that this market is about to what? Go up from here. You see the W? That's a perfect W shape. W. See how the market moved up. So all these patterns are there. You're going to be seeing them in your chart. You see them even as you trade. Don't worry about perfection. They mustn't be as perfect as you want them to be. Okay. But you can see how these patterns show up for traders to make profit. Why can't you just follow up simple instruction and follow these patterns, and you're going to stay what? Become a profitable trader. Okay, so you see these patterns, they are there. They are there. You can see this, how this market did this. Okay, let me put it on 4 hour. Sorry.